Hey everyone, this is Shai with you, and we're back looking at the market profile for the Nifty and the Bank Nifty today. We're coming out of a very eventful week last. The indices dipped lower. So in this video, we hope to capture what exactly happened last week, and we'll be looking at what the charts are saying as of today and how the market is positioned to view the information which the market is giving us. So we keep saying this all the time. There are two aspects to the markets according to us. One is what is the chart actually saying, and number two is how is the market positioned to that saying. So the chart we are going to be looking at is the market profile, which gives us everything, and the positioning of the market is predominantly now through the options market, which is about 10 to 20x of the futures market nowadays. So that volume in the options market in terms of value is easily between about 50,000 to about 60,000 crores per day. And on the option settlement, which is the Thursday, it easily extends to about 80,000 crores in volume on that particular day, right? So that's why, we keep saying over here, what's happened in the past is not important. The market is forward looking and tends to look at what can happen in the future. And why do I say that? Because there is a 50,000 crore of volume trading every single day, of value trading every single day, which changes the information which is already in the market onto something which can happen in the future. So let's look at what the markets are doing. So here, this is the profile of last week, and so this is the profile of last week, and we seeing this selling, which came in at about 19,780 odd in the futures on the 2nd of August, and the market is put in another single tail on the 3rd of August. And this is the profile, of course, of Friday. So Wednesday and Thursday were those two big drops, which took the market from a high of about 19,760, 780 to a dip of about 19,380 in the future. So about roughly about 350 odd points. Now this is where we have closed. And the important thing to note on Friday is that we closed at the lows of the single prints of Thursday's session. Now, for those who are new to the market profile, you need to understand the gospel truth of the market profile, and that is always written in the A singles. The A singles are the most valuable information you can quickly pick up from a market profile chart. And what it tends to tell you, that whenever you see an A single print in the profile, it tells you that there is either support or resistance if it's at the top of the profile, and if it's at the bottom of the profile, that A single is a support. So as an evidence of that, you would see this over here on the 2nd of August. It's the same A singles over here, and that told you that the market was about to dip lower. So we spoke about this A single over here on the 21st and the 27th of July. As long as the market does not take them out, the market is tend to see supply at that level. So it's a quick way of knowing where the supply or the demand of the market is. You just plot a market profile chart, and the first thing you look for is A singles. Now you can say that there were A singles over here also, but you can make out immediately the next day there were those A singles were countered by another set of A singles in the downward direction. That's why they lost their importance. So into the coming week, the first thing we want to know from the buyers is whether they can march into these A singles, and then if they do that, whether they can get into these A singles at about 19,714 and above. I want you to pay attention to these levels, because in one way or the other, both of these levels, the highs of Friday and these single prints 19,712 and the top of these prints at about 19,760, will have a role to play in the coming session. So pay attention, okay, to those levels. See how the market, okay, positions with respect, okay, to those levels out over here. If they do take it out, then you can say the buyers are re-exerting control in the market, and you can look, okay, at a market, okay, going up. Okay, so this is the daily profile. If they do take it out, okay, then okay, yes, okay, we can, okay, look at a market, okay, running back up to about 19,820. But I really do not, okay, think in the coming week, okay, the market, okay, can on an extended bull run make it above last week's high. So that's a little bit difficult in the context of the selling we've seen. The buyers, okay, have a job on hands, and they really need to push into here. What happens, okay, lower is, if you can see over here, on the pull on that drop, okay, of Thursday, the market, okay, put in a responsive buying cat pattern. And we've spoken about this many times, okay, through our periodic inputs on the market profile. And whenever this happens, this tells you, okay, that there is a good chance, okay, of a bottom coming into play. And the confirmation of that always comes in the next open, when the market opens, okay, above that. So I think, okay, we remarked about this in an earlier video also. This was another settlement, a similar kind of a profile. On the opposite side, the POC had shifted higher, so that was about 19970. It was a different future. That was then, okay, the July future, but the POC shifted at the top, told us, okay, that there was bookings happening over there, and the market, okay, didn't see that level subsequently. So this would serve as a support into the coming week. The buyers, okay, can work with 19,420 as a base for the coming week. So as long as, okay, they can hold that level, you can say, okay, that there is a chance, okay, of a pullback in the coming week, if they do not make it immediately above the A singles. But once, okay, this is broken, expect lower levels of about 19,080, 19,200 and 19,000. There's nothing to defend this market lower, guys. And if you look at all these profiles over here, this is thin air. Okay, these profiles, okay, do not really have a solid structure, and there is no really big support down, right down to about the 19,160 levels. So if that, okay, pink POC is broken for any reason, I don't see this market, okay, stopping till we hit, okay, the reverse of these singles at about 19,160. So these were the singles, okay, which A singles again, which began that up move. And we've seen, okay, that the market, okay, progressed, okay, based on this single. There was another set of A singles over here, and the market, okay, kept progressing till the singles, okay, have come in the opposite direction. And in market profile, we call that a change of polarity. Let's quickly look at what the weekly profile is doing. So you quickly click onto that W at the bottom of the profile, and you get a weekly profile on screen. And the weekly profile would tell you, okay, about what the market is expected to do from a weekly point of view. So here, okay, you have that same the POC is around 19,530 levels on the weekly profile. And we are here, we've come out, okay, of this. So the weekly profile structure is not really, okay, that damaged. The daily looks, okay, a little bit off from a buyer perspective. The weekly, okay, the buyers, okay, are still around. There's not a lot of damage evident in the weekly profiles. This value is going lower, but that's about it. But in terms of structure, as long as, okay, these lows, okay, hold of this particular profile, there is, okay, not a lot of, okay, damage, okay, happening on the weekly time frame. But it's up to buyers to hold up above 19,530 all through the coming week up to about settlement Thursday, and see if they can do a job in filling up this profile right up to about this 19,800 odd levels. If they manage 19,530, then they could look, okay, to fill up this low volume, okay, traction zone which we had all through last week, right? Let's look at what the bank Nifty has done in the last week. I'll begin, okay, with the daily profile again. And you can make out from the bank Nifty again, it's the same A singles I spoke to you about. So these are the big A singles, okay, which we detected on the 27th of July, and which we mentioned were a sign of polarity change. Again, okay, it's a classical market profile sell side signal, and you will never get a better indication of a market about to reverse than spotting A side singles in market profile chart. So whenever you open up a market profile chart, pay attention to the A singles. They are signs of polarity moving. So this particular signal appeared on the 27th of July. The market is forced an extension lower at D. Then you can make out from here on the 28th of July, the market kept hitting those A singles. Again, A singles over here and A singles over here on the 2nd of August, also pushing that market drop lower. Right now, the counter to these A singles is a single print tail on the lower side of the profiles, which we have not seen so far. So the polarity change will not happen till we do not see a single print on the lower side. Having said that, the bank nifty, even though it is dominated a little bit on the sell side by the profiles, the way the profiles are shaping, there could be some consolidation shifting coming through in the bank nifty. Let's look at what the weekly chart is saying. Yeah, and you can make out that the POC was at the very top over here, 45,730 in the weekly profile, and this is the 45,100 level of the weekly VWAP of the bank nifty futures. So if this can hold these lows of last week, there could be a sign of a consolidation in the bank nifty in the coming week as well. Right now, this is what the charts are saying. Now I mentioned at the top of our conversation that there are two things to look at. One is what the charts are saying, the message of the market, and number two is how the market is positioned for the message of the market. And the best way we find out the positioning of the market, the option inventory is in the spectrum charts. Right, so this is the past 4 days of the nifty spot spectrum, and inventory is currently positioned for a range of about 19,600 to about 19,400 on the spot. Now all through Friday, yellow reference line, which we call the MVIS higher line, went flat. So that tells you that the market is in a consolidation mode. There is no major inventory shift which is happening, but pay attention to it. If it starts sloping up or starts sloping lower, that's the time these lines can change. That is a function of the big players in the market adjusting inventory or adjusting positions to look forward to a move which can potentially come into the indices. So this is the nifty. I'll have a look at the bank nifty spectrum as well. So this is the bank nifty, and it is trading a range of about 45,500 to about 44,500 for the coming week. That's where the inventory is positioned for the week ahead, with a gamma zero of about 45,000. So it does look like it wants to play for a range bound move in the coming week. Right, so you can keep tracking these spectrum charts to see how inventory adjusts itself to the message of the market. Now remember, again, in closing, I want to re-emphasize, the market does not work on past data. It looks at current data, and big money is always changing and adjusting positions to prepare itself for a move which can possibly happen tomorrow or the next few days. The market is always forward looking, and as traders, we need to be forward looking. The past is just telling us what has happened, what we need to prepare, and the best way to monetize information is to be prepared for what the market can do tomorrow. So work out all those possibilities. What possibly can happen is what you should be looking to trade with. So I hope you found this useful. If you require more information about how to read the market profile, we have an e-course for you on our website. This will take you through all the things which you need to know about the market profile. There are 12 informative videos over here, and we speak a lot about how to use the power behind those A singles also. Right, and if you want to know a lot more about what the option market is, then head over to YouTube and subscribe to our channel. We keep posting periodic videos on all the interesting things about the options market. We try to look at the option market from the point of view of big money and look at various elements, okay, which make up the pricing of the option. So this is not restricted to only open interest. There is a lot more, okay, in the market besides open interest, and that has to do with the delta, the gamma, the implied volatilities, etc. And all that is as a complete universe, okay, we cover, okay, in our YouTube channel, right? So I'm signing off for now. I hope, okay, you found this information useful. If you require anything, please, okay, give us a shout out. Thank you for listening in.